Hello guys, today is as you can see, it's Monday 22 October 2018. Now this is just a review. We continue each week a review and see where is the things are going. We see as the Dow Jones, this is the ETF. So from February till now, the stock market is trending into a range. Okay, trending into range, it means it doesn't make a trend. But lately there is a trend that was forming, and it lasted around from let's say July, August, September, October, nearly 3 months and a half. It was an excellent trend, as you can see, but it was stopped with the news of, you see here, it was stopped, and then we have 2 days that are too bad in the market. Okay, now what did I tell you last time? I tell you, check this line, which is the new support line. Here it's new because it was up and then the stock market go down. It means go down the resistance line. Now what does it mean for you? For you, the market is not good to buy right now, especially those who wants to buy ETFs. Okay, now because it stops going down, it go up a few days and it go down. So we should be waiting when this Dow Jones goes above the resistance line, or it can go down and hit the February support line that it is here, that it was in the 9th of February 2018. If the market goes down below this second red line here, it means that we go into a bear market. Right now it's above this line, so we should just be waiting. Now let's check the other major indexes. S&P 500 is doing the same. It was above, it goes 2 days. Now these 2 days that you see here, we have spoken about them. They are the news. The news when the federal government increases the interest rate. And we said that when the federal government increases the interest rate, a lot of people, a lot of investors, they sell stocks and they buy bonds. Because bonds, they give 4% or 7% or 10%. It's better to get 5% or 7%, or it's better than to stay in a market that we don't know where it goes. Okay, so the S&P 500, this is the ETF SPY. Okay, it's the same as the Dow Jones. As you see, they do the same. Now let's go to Russell 2000, which is 2000 small companies. Now these 2000 companies, they were doing so good. You see here, they were above the resistance line for many months, from May 17 until 9 of October. All these months here, they were excellent. It means there is a trend. Unfortunately, the trend was going down, and then it was going down before, okay, before the news. And you can see the news is only 2 days. These 2 days are the news, 1 and 2. But before 2000, Russell 2000 was going down. Now we try just to see in the future what will happen. And if you are going to buy, for example, ETFs, it is not the time yet until we see the direction. Since there is no direction in the market, you are just wasting your time. You can just bet and you leave it, but you are just wasting your time because you will never know. Maybe it will go down more, crossing this line, and then it goes to cross this line, and then we are in a bear market. And we should do something else. Okay? We should short the market, the whole market. It's better than to stay there. Okay, so thank you very much for watching. Please, if you have questions, ask, and whenever I got time, I will try to answer all your questions as usual. You have, as always, my my email. My email is always in the description. Please send me an email if it is an urgent matter. Thank you very much.